Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news of a positive dairy auction today. This morning's dairy auction has brought overall prices 3.6% higher in US dollar terms than the last auction. And with the recent softness in the Kiwi dollar, prices are actually 5.2% higher in local currency. All this is driven by stronger whole milk powder prices, which are now up to $3,233 a tonne, and that is 7.8% higher than the previous auction. Overall prices are now at their highest of the year. In fact, prices are 60% higher than this time last year when they were coming off their lowest in the recent memory. Today's results, which are being reported by others as above expectations, were actually accurately signalled by the derivatives market in the past few days. They probably won't change any payout decisions, but at least they're rising, and this is in the fourth consecutive increase, taking this run in total to a 10% gain. Going the other way, the major American car makers reported sales declines in new vehicle sales for April. Is another clear sign the long boom cycle that lifted the American car industry to record sales last year is losing steam. GM sold 6% less last month in their home market, Ford sold 7.2% less, Fiat Chrysler sold 7% less, and Toyota sold 4.4% less. Seasonality has something to do with it, but the lower trend is clear. Also losing is the new president. His efforts to repeal his predecessor's healthcare plan, his effort to get his own in place, and his budget plan all look like they won't be supported by Congress. He is not happy today. In Europe, Greece and the EU look like they might have a win. Greece has promised to further cut pensions by 0.9% on average and lower the tax threshold. That will produce savings of about 2% of GDP. Its creditors, the EU and the IMF, have agreed to make Greece's debt burden sustainable. And staying in Europe, their jobless rate was reported overnight at 9.5% in March, stubbornly high and not slipping as markets had expected. But at least their factory sector is improving. In fact, that might be understating it. Output, new orders and employment all rose at their quickest rates in 6 years. Even France, Spain and Italy are showing healthy expansions. Late yesterday, the Reserve Bank of Australia held its policy rate unchanged at 1.5%, and that's as expected. But underlying commentary was more positive. It sees the Aussie economy transitioning well in its shift away from mining and resources, although it does want to see higher levels of investment. A push in that direction is likely to come from the upcoming Australian federal budget, which promises to target big-ticket infrastructure spending. In New York, the US Treasury 10-year yield is lower today, now down to 2.29%. Oil prices are sharply lower today as well, down over $1 and now just over $47.50 for the US benchmark, while the Brent benchmark is just over $50 a barrel. The gold price is down too, slipping $3 to $1,253 an ounce. And the New Zealand dollar will open just a little higher at 69.3 US cents. On the cross rates, the Kiwi dollar is at 92.1 Aussie cents, and against the euro at 63.4 euro cents. The TWI is now at 74. And finally, we should note that the Bitcoin price is taking off again, racing higher to a new record and actually pushing up through the $1,400 level. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.